But now we need to get to thing number three, and that's Nike. And Nike really reassuring investors with its report last night. Sales overall up 5% to $10.9 billion. And reassuring investors on two fronts that I know that you have more detail on. One, China slowing less than estimated. And two, supply chain. As we talked about yesterday with Camilla Lyon, an analyst who covers the stock, the problem with Nike is not demand, right? People want to buy the shoes. The problem with Nike in recent quarters, at least outside of China, has more been supply. Can they make enough shoes to meet the demand? And this quarter seemed to be reassuring here. So the other trend that I think is really important here is direct-to-consumer revenue. As we have talked about extensively, Nike has been shifting its model to some extent, and direct-to-consumer revenue was up 17%, excluding currency effects, and it now accounts for 42% of the company's total sales. So really, that's been a big shift in the past 5 years or so, Soz.
Hey, Julie, I mean, all due respect to Nike, I want another pair of those On sneakers. They are really comfy as AF, and really, they are quite cool looking. But I will note this. Sales in China, to your point, fell 8%, excluding the impacts of currency. The Street was looking for about a 12% decline. Some of the whisper numbers out there were looking for a decline of 15%. So check done, no pun intended. Nike nailed it on that respect. And then two, you had gross margins up 100 basis points. And that is very, very impressive, Julian, in a land where you continue to see a lot of supply chain bottlenecks. Now, the good thing here is, we'll talk more about this later, Nike noting all factories are back to full capacity in Vietnam. That is a big win for them.